Our Market Monitor has something for everybody tonight, a classic blue chip, a value play, and a sexy tech stock. He's Larry Rosenthal, president of his own firm, Rosenthal Wealth Management. Larry, welcome. Good to have you with us. You know, our earlier guest said that stock market performance going forward is all going to depend on earnings. And so far, from where I sit, earnings don't look all that great. Do you think they are all that great? Do you think they justify prices at current levels?
Well, Tyler, when you take a look at first of all, thanks for having me this evening. And earnings is coming in just as we sort of thought they would. We keep a very close eye on earnings, and they're coming in a mixed bag, and that's exactly what we're going to get in a moderate growth economy. But when you take a look at the earnings yield on the S&P, it's a little north of 6.5%, and you put that over top of a 10-year Treasury at 2.84%. We have a risk premium there of about 3.75, 3.8%, which is very attractive given the alternatives to the marketplace.
You were telling us earlier today that you like these normal kind of earnings season rather than shock and awe, you know, when they're really hot earnings. Tell us why.
Absolutely, Susie. You know, when earnings come in and they're shock and awe either to the miss or exceed expectations, the markets kind of get a little bit jittery like that, and we like to see a more normal earnings type of a season where we're coming in with a mixed bag. And again, that's to our expectation right now in a moderate growth type of an economy.
One other quick follow-up on earnings. I mean, you said that they're kind of consistent with a choppy economy, a slow-growing economy, but stock prices have been anything but over the past year indicative of a slow-growing, choppy economy. They've been going up 30%. How do you square the two very quickly?
Well, when you take a look at the backdrop of monetary policy, you know, the market's going to continue to punish savers and reward risk takers, and that's to my point of the 10-year hovering about 8.5 or 2.8%, with the earnings yield of 6.5 in the marketplace. That's what we're starting to see, and the market's still carrying a PE of you know in the 15 range, which really isn't that lofty right now. We think the S&P can get up to 1900, 1950, before we start to see some lofty range, if not even higher than that.
Okay, our viewers are going to be very curious about your stock recommendations in this market. Let's start with the first one, Dow Chemical. You say this is a classic blue chip.
Absolutely it is, Susie. Let's take a look at estimates on GDP in 2014 of about 2.5%. Well, the earnings growth estimate in Dow is 3.8. So here we have a company that's estimated to earn more than GDP in the U.S. And then you take a look again at the 10-year Treasury at 2.84 today. The yield on Dow is 3.3%. So we're getting paid more than the 10-year Treasury. It has a PE in the low 15s with an earnings yield on it of over 6.5. But the true underlying value of Dow Chemical here is, it delivers its products and services are plastics and chemicals. And Dow's major cost component is the use of natural gas. And with sort of the renaissance or the new natural gas explosion here in the U.S., Dow is going to be able to widen its margins substantially and deliver its products and services on a worldwide stage. We think Dow at this price is a very attractive buy for a long time.
We've only got about 60 seconds left, so I'm going to ask you to cover your next two, the value play Sinopec and the tech stock 3D Systems, in about 30 seconds each.
Let's see if we can handle that. Okay, Sinopec, great deep value buy, sort of a Warren Buffett-ish type of a long-term buy and hold. It delivers oil to mainland China, and one of the beautiful things about it right now is that we know that the rising middle class in the Asian region over there are going to use energy to consume as GDP continues to go. It correlates very well.
And 3D Systems?
3D Systems is a great technology story. It's on the cutting edge. It's helping deliver products and services to the marketplace much faster through its 3D printing. The numbers are off the chart right now. It needs to increase its revenue. But if you like technology and want to be on the cutting edge, find a good entry point, put some limits underneath of it, and enjoy the ride with this.
Do you own any of these guys personally, or does your firm invest in them?
Yes, the firm owns Sinopec and 3D Systems. I personally own 3D Systems and Dow.
All right, Larry, thanks very much. Have a great weekend.
Thanks for having us. You
Larry
too.
Rosenthal
Bye-bye.
of Rosenthal Wealth Management.